Hey, everybody. Good evening. I am doing this video podcast from the shores of Lake Tahoe in Nevada, on the Nevada side. So, a good evening and a good beginning to your week. This is another edition of the Biotech Buzz. Do that about every week to 2 weeks, just to sort of get a lay of the land of what's going on in biotech, clinical, regulatory, market pulse. And the idea is really from an investment perspective. We want to make it fast. We want to make it exciting. Get basically, what is the buzz going in biotech, and then take a quick temperature check, so to speak, of what's going on. I apologize if I sneeze during this and surprise you while you're listening to this audio only. So let's just get started. A quick shout out to Rory McIlroy, your 2025 Masters champion. The man finally got his green jacket, played an incredible 4 days. And for me, I just wrapped up 2 incredible weeks in Lake Tahoe, snowboarding Palisades and soaking in the spring sun. Feeling refreshed and ready to dive back into biotech, which, let's be honest, has been a bit more white knuckle than the slopes. And for me, as an intermediate snowboarder, the slopes can be pretty white knuckle. Biotech is far more than that right now. So let's talk a little bit about biotech news in the PDUFA calendar. PDUFA is just the approval, dates, and let's talk about what's happened. Sort of, the things that have really stuck out. We'll kick things off with the clinical and regulatory landscape. Big shakeups at the FDA. Staff cuts and leadership exits are raising red flags about potential revenue delays. I mean, this commentary we're hearing from everybody, even just anecdotally talking to somebody here in Lake Tahoe who works in the regulatory setting, said that there could be slowdowns, but taking a wait and see approach. In terms of just other news, Jazz Pharma paid $145 million to settle antitrust claims over Xyrem. Sun Pharma is now cleared to challenge Insight in alopecia. There are 3 PDUFA dates to track. PDUFAs are approval dates. Abeona, ticker ABEO. PZ-cel for RDEB, April the 29th. Veristem, ticker VSTM. Avutometinib plus Defasitinib for LGSOC, June the 30th. And then finally, Outlook Therapeutics, OTLK, bevacizumab, VIKG for wet AMD, August the 27th. Keep these 3 on your radar. And these are important because they'll get us an early temperature check on what's going on with the FDA. Are they going to be slowed down in terms of drug approvals, et cetera? And these 3 will give us a good sense for that. There are 3 very different types of products looking at different diseases, so it'll be a good sort of a way of basically getting the temperature of where the FDA is with all the turnover and the job cuts going on over there. In terms of the market pulse, let's do a quick check there. Where does biotech stand? So, despite recent gains, XBN peers are still hugging 52-week lows. If you look at, 52 weeks and just divide the quartiles, biotech is still basically in the lowest quartile. The large caps are probably in the lowest to the mid portion of the quartile in terms of 52-week sort of trading activity, the price of these indices, but we're still, hugging those 52-week lows. Only 8% of 2025 biotech equity deals are above their issue price. The VIX, this is the volatility index, peaked about 45. That's pandemic territory. And again, the more volatile the markets are, actually, it's not a good thing for biotech. Biotech generally does not perform well in very volatile markets. Nearly 40% of US biotechs now trade below cash. So the takeaway, we're in deep value territory. For the brave and the patient, this could be a setup worth watching. And that's another reason for these videos and emails that we're writing. We're not, suggesting that you should be investing in biotech today or that biotech is doing well. Absolutely not. Biotech is in a world of pain in many ways. But we do believe, as we've pointed out in many ways, that there's fundamental variables that are indicating that we're probably in the 8th or 9th inning of a consolidation. And then the next few months or few quarters, biotech could reach a point where it could start, quote unquote, working again. So this is the time to really get to know the sector, do the work, or if you're a specialist, start, looking at stocks or looking at areas that could be a potential interesting to invest in. Let's talk about tariff turmoil and the global fallout. Trump's Liberation Day tariffs sent markets reeling. Biotech got slammed. US biotech shed 32 billion in a week. China biotech dropped about 19%. Europe down about 15%. The pain is global. Pharma may be temporarily exempt, but whispers of excise taxes and import duties are swirling. Meanwhile, J&J, Lilly, Merck, and Novo are all announcing US investments, but R&D budgets might feel the pinch. So again, it's an area where essentially the tariff volatility is really smacking biotech right on the chin. Pharma, seems to be doing a little bit better, but again, that's been historically viewed as a cyclically defensive sector, so which makes sense. Let's talk a little bit about deal activity or deal flow. About 7.4 billion in life sciences equity deals year to date. Only about 3 of 37 deals are trading above their issue price. IPOs, tepid, 5 price this year, just 1 is in the green. Registered directs and pipes are still active, but mostly event-driven. So investors are being very selective, and rightly so. So let's talk a little bit about sentiment and the reset. So at a recent H.C. Wainwright investor event, the mood was subdued, but not hopeless. We were not at this event, so this is just from commentary that was sent out regarding this event. Most attendees saw this as a necessary shakeout. Bad companies may fade, making room for solid science and serious execution, and mid-cap and commercial stage names may lead the next rebound. So that's where sort of investors that are really focused on biotech, that's sort of what they're thinking right now. And that's, basically in line of what we've been saying also. The large cap commercial companies are doing well. In the mid cap space, you want to look at companies that are, that ideally don't want to be looking for cash or don't need to raise cash, are on their way to being profitable, hopefully commercial stage. So again, I think that this is not really that surprising. Let's talk about closing thoughts, and we do want to give a shout out to our sources. Where does this leave us? We're still skiing through whiteout conditions, but the terrain ahead could be rewarding. Keeping both hands, both sets of fingers, and my toes crossed. So again, thanks for tuning in. This update was powered by reporting from Biopharma Dive, BioWorld, Fierce Biotech, Fierce Pharma, Endpoints, BioCentury, Stat News, First World Pharma, and the Biotech Capital Compass. I also want to give a shout out to my old colleague, Jay Olson and his team at Oppenheimer. Great work. For Tommy Hoffman at H.C. Wainwright, for Tony Caserta at Roth Capital, and Stifel Investment Banking for also helping us being able to compile all of all this amazing amount of information into this sort of what I call like an edible video podcast. So please stay curious, stay skeptical, and hey, if you get a chance, go catch some late season powder. There's about, I think, a couple, maybe 3 weeks left. It's pretty amazing. I got to learn the term, I think it's mashed potatoes. I think I was snowboarding in mashed potatoes most of the last 2 weeks. So I'm looking forward to going and getting some good Indian food back home in New York City, Brooklyn. Take care, everybody. Have a good Sunday evening. And I really hope your week starts well.